Good morning, everyone. Welcome to the Trading Market Technicals Morning Call video for Wednesday, March the 20th. Well, we did get an up day yesterday, but it really was price action was very, very mixed. Dow was up 3, dollar up 29 cents. Looks like safe haven flows are coming into the dollar and gold as well. Gold up 6, Nasdaq down 8, S&P down 3. Pretty much of a benign day yesterday. Market digesting what happened with the Cyprus news on Monday. We still have not gotten a report out of what Cyprus deal and their bailout is going to be. So there's a lot of rejections and, if you will, back and forth. So that's going to also put on a risk-on, risk-off type thing. So you really need to be aware of that. And now is not the time, definitely not the time to be holding any type of positions going into the next few days. We do have, economic-wise, economic calendar-wise, we have the FOMC interest rate decision today at 2 o'clock. Ben Bernanke will be holding his press conference in Washington at 2:30. So that is going to definitely be a market mover. We are going to watch and dissect his statement and his minutes to see if he is going to talk a little hawkish here, and is he going to pull back the reins on his asset purchase, or if he is going to continue what he's doing. Now, obviously, I do not suspect him to raise rates at all or even talk about it, but it's going to be interesting to see what type of verbalage that he's going to use. Is it going to be hawkish, dovish? That's really what the market's going to dissect on. Usually, the first move after the FOMC announcement is usually wrong, and it usually reverses. That's hindsight. Take that as if you will. But I usually would not be looking to trade for at least the first 45 minutes after the FOMC statement. Markets are just too volatile. They run up and down, and could really hurt you and get stopped out here. Lastly, FedEx reports before the market opens. That's also going to be a real important indicator. They're going to report. They're usually looking for $1.38 a share. That stock usually typically trades higher going into April along the transportation sector. Seasonality, April kind of unwinds the strength of the transportation sector. Usually peaks around that time, along with the broad market. So we're coming to the end of seasonal strength of equities and, of course, transportation sector as well. So that's interesting to see. Maybe the markets are looking like it's topping here. We only had 2 days of up and down type at price action, but I do think that the markets look like they want to top. Nothing tradable here. We want to see the market sell off, roll over, bounce, weak bounce, make that lower high off the top, and then start to sell off again, taking out some key pivotal lows. That is when you want to get in and start looking to short. Now, intraday-wise, you can be looking at short rallies, no question about it, at this moment. Now, we're up about 4.5 in the pre-market. Really not much, but the markets have stabilized in the overnight session. So we're really, this is where you need to be nimble. This is where you need to be patient, because the market seems to be topping here, but that doesn't mean that we can't get one more push up before the market fails. Okay? Now, let's run into the charts. Pretty quiet, but I want to show you, I've showed you charts before in copper every day, but I want to show you how bad this is. This is really not good for the bulls. We have continued sell-off outside day to the previous big engulfing candle breaking out of this symmetrical triangle. Now, this here does not tell me any type of indication that the markets might want to move higher. As you can see, our copper to the SPX moving lower. This is actually very bad for the equity markets. Copper is a leading metal, industrial metal, and it really gauges manufacturing, and this is moving much lower. So this is not good here. This is not what you want to see. The next thing is, and I've showed you before, is the emerging markets. And when you have emerging markets diverging away from the equity markets, this also is not looking pretty, as well as China. I'm not going to show you the FXI. You can look at it yourself. It's the same chart, actually. So this is actually not looking too good. We are oversold. Oversold is not a buy signal, but it's something to keep note of. Maybe you get to the 200-day and we get a dead cat bounce here. But when emerging markets are diverging from our U.S. markets, that isn't a healthy sign for a continuation higher for equity. So that's something that we want to keep an eye on here. This does not look good at all. Okay, now I want to show you well, let me show you one more indicator. New high, new low. As you can see here, new high, new low have actually fell to 219. Now, anything above 0 and above 100 is actually bullish. So we're still bullish, but we want to start breaking below this. Once you start breaking below this and hold below the 0 line, that tells me that a risk off is actually happening, and we are still going to be starting to move lower. So keep an eye on this indicator as well, the new high, new low, New York Stock Exchange new high, new low. This is actually something of concern as well. Now, we talked about the VIX. VIX did actually break back up again. We had another outside day with the VIX. So people are getting a little nervous. They are buying protection. And as you can see here, the VIX has a long way to go to really start getting toppy here. So even if it did chop around down here at the lower end of the range, we are back above this little 12 area of the VIX. So something like here, a break high or break above the 200-day could really start to get going, and that would put a lot of fear into this market. And then, of course, that would be a sell signal for equities. Take a look at the CBOE put call. As you can see here, back up above 97. Kind of neutral, but it is telling me from here to here that market participants are getting a little worried about what's happening here overseas. Now, the Cyprus news, believe it or not, I really don't see anything that great, that much of a big deal. But when the markets are grinding higher since technically December 31st, and even lower by the end of March, the end of November, the election, there's got to be a reason. It's going to be a reason for some people to take profits, and rightfully so. It's insane that the market just grinds higher every day since January with no volatility. We had a little volatility for 2 days in February, the end of February, and then we had a couple of 2-day volatility the last couple of days. But now we really want to see a trend, right? We want to see a trend forming that the markets have changed, and now we're trading lower. So we can start getting a little bit more aggressive intraday. The markets are still quiet, guys. If you're not sitting in front of the screens, you would know that the markets are very quiet. Even though we have a little bit of volatility during the course of the trading day, if you can't catch that stock the way you want it as a perfect setup, then you're really not doing much. So, but I do see the volatility starting to pick up. I mentioned that to a few people last week, and this is actually a very, very good sign. Take a look at gold and then GDX. Gold did rally again. Again, safe haven flows coming in, as well as the U.S. dollar. So we did have some safe haven flows come in. And now this ratio chart here, I'd like to see this break back above. I do see gold starting to rally. However, the GDX really hasn't produced much here. And if you can see here, we do have this little inverted head and shoulders. I'll show this on another chart with a slanted neckline. 38.20 right here is where we have to break out. If we break out a 38.20 and hold on a closing basis, then I think we have a nice little trade happening in the GDX. Until then, I would treat it just more of a day trading stock. It's very heavy. It really can't rally, and that's a concern for me to start looking to hold anything. Okay, take a look at the GDX chart here. It is a little bit more cleaner. This is my ninja chart, and as you can see here, we have the right shoulder that now has build. And if you remember, I put that little sort of hypothetical analogy of breaking back higher, lower high to create this, higher low to create this right shoulder, and then a break back out of this wedge. So we'll see what happens, but 38.20, as you can see here, is really going to be key. Okay, take a look at these spiders now. Spiders hit the 20-day moving average right to the penny, along with this horizontal resistance, which is now support. We need to really break below the 20 to really get going. Then you have your 50, and then, of course, you have this long-term trend line here that actually is valid, holding that 50-day moving average along with it. So it coincides nicely with the 50-day. So below here, below the 20-day, and really above this channel here, above this top area of 156.25, We're either going to need to break back out of this thing, or we're going to have to start breaking lower. And really, all bets are going to be the FOMC statement. Nobody really has any idea which way this thing is going to run. So if they talk a little bit hawkish here, that they're slowing down their asset purchase buying program, then I think that the markets will sell off and probably sell off pretty hard here. But again, be patient today around 2 o'clock, 2:30, after he releases his comments, because you really don't want to be running into a freight train here. Okay, same thing here. This is just on numbers with the Spider 60-minute, and I have all of these little numbers and little areas of support. We caught that for the S2. Just literally right to the penny here. Then we have this little area here, which is nice, coincides nicely with the 200-day moving average, 152.87. So keep an eye on this area here. This is what we're looking at. Now we do have some confluence area of resistance. We do have bearish configuration with our 8 and 20 and our 50 starting to roll over. So there's a little bit, starting to get a little bit of a overhead resistance here. Here's the 30-minute chart. As you can see what I mean, we're literally in this range all of March. We did pop out to break back in it again. We sold back down, and now we're back in it again. And again, futures are up a little bit, so maybe we get a little bit of push into FOMC, and then they start to sell off. And that's actually would be fantastic. That would be a great trading opportunity for the afternoon session. More than likely, guys, the morning session is going to be very, very quiet until FOMC comes out, because most market participant and traders, they really don't get involved until after the announcement. And here, same thing, guys, 1555, 1530. All right, that 20-day, we didn't get close to that, but we need to really break below that to really get going. And then, of course, we've got that 50-day here. So these are valid support areas. You might want to write them down as well. I'm still looking for a 1475 target here at one point. Okay, transports. Got a little bit of a flat top here, and this is a double top, if you will. We have this little secondary trend line. This was the original resistance, and we hit that right to the penny again. That's why I'm leaving that there. So the 20-day, look how far away it is to the 20-day. So I like to see FedEx is going to really move the markets as far as the transportation sector. So that is a big, big number. It definitely gauges the economy and how the economy's humming. So pay attention to that this morning. It's going to be opening up before earnings concern. Also, you have General Mills and Lennar, L-E-N, and one of the builders. So should be interesting morning this morning to see what happens. Okay, same thing with the IWMs in this channel. Held that right to the penny from yesterday, and we did recover, as you can see here, with this bottoming tail. And look what happens. See, volume is increasing on the sell side. So there's more active sellers up at these areas here. So that's a concern, because if the market can break, I think you're going to get a lot of pressure for sellers to the downside and start really hitting this market lower, because you have a lot of buyers up at these areas, and a lot of buyers, once they break lower, and more than likely these buyers are going to have stops below the 20 and below this area here. And if this market does break below 92.90 in the IWM and then the 20, then I think you're going to have a big flush back down to this area here at least, and then we would reevaluate it, because logically where these stops are, same thing with the Dow Jones. People that are buying the ETF here, this is why the market has actually stopped in this area. Once we break lower and we hit that 20 and break lower below that, then I think you're going to have another big flush here, because there's a lot of longs, a lot of inflows that were bought up in this area, and that's why that is a big concern for me. When you have retail buying up at the highs at these areas of resistance, you're going to have big money come in, hold the market higher, and sell into that and reduce their positions while the retail guys are buying here, and that's not a good thing. So we really want to use caution. Okay, we had Apple taking a break a little bit. Apple did manage to rally positive, but sold back off and closed lower. But still, a good sign. I like the way the stochastics and MACDs are starting to roll back higher. I like a little bit of the volume that's picking up, and we are above that key 440 area. And we're just hitting this 50-day moving average. So Apple, I think, could use a little bit of a rest, maybe pop up here, but needs to hold 440. If we get back below 440, then I think all bets are off. I do see, as far as technically speaking, I do think that the markets, I think Apple is probably headed lower a little bit. in the short term after this little dead cat bounce here. But we'll see. Maybe this dead cat bounce turns into something bigger. So we'll just have to watch and monitor it as Apple trades. But Apple, to me, again, still a day trading stock. And here's the Qs. We broke back this little consolidation into this larger channel. We just barely got back above it here within a few pennies. We're holding a 20-day moving average. So I think if the Qs can break a little lower into this channel, I think you'd have a great buy area here, 66.80, 66.50. This is something that I'll be looking for probably a swing trade. All right, guys. FOMC again, 2 o'clock. The announcement at 2:30. FedEx this morning. Lot of stuff to digest. So please use caution. Be nimble. If you're looking to short something and you're short, protect your short because things could change at a drop of a dime. Yesterday in the afternoon, they had some sort of news out in Cyprus, and people that were short automatically got stopped out for a quick. They ran the markets up for 5 minutes and then sold back off again. And that's really what you don't want to deal with, right? That's bad volatility. But once the news comes out, and then we have our earnings or whatever came out of Europe already now set, that's when you really want to trade, and that's when you can get aggressive. But right now, getting aggressive isn't the time at the moment, but we do see volatility picking up, so that's a really, really good sign that we should be active here. Okay? Have a great day, everybody, and we'll talk to you tomorrow. Take care.